Awaited weekly newsletter, Chris Wood of Jefferies this time around speaks about his cyclical trade. He speaks about his view on the US presidential elections and what he thinks Joe Biden could be up to. He also speaks about the continued rise of China and how exactly they've done a very good job in containing COVID. Now, when you're talking about what Chris Wood is saying in this particular newsletter, he's actually speaking about the cyclical trade, and he continues to believe that the cyclical trade is something that one should remain long on even further. He believes that markets will continue to focus on the vaccine and look beyond the cases and the deaths. However, what he is saying is that hopefully a vaccine will be out soon. He believes that, however, the concern is that US deaths continue to rise, and he's spoken about how the rising rate in the US deaths is something that should not be ignored completely. He's speaking about the dispute between the Federal Reserve and the Treasury, and he believes that due to this, one of the consequences is that there is a likelihood that increases that Fed will tweak the Quanto easing at the next FOMC meeting on 15 to 16 December by increasing purchases of the longer dated Treasury securities. Now, also what he is saying is that he's speaking about how, along with the in Joe Biden coming in, he believes that US-China relationships will be on the mend. He believes that the posturing will not be so aggressive as it was earlier, and he's also speaking about how China, now even during 2020, it has continued to see its share of world exports, or its share in the world economy, continue to increase. He believes one of the reasons for that is he now feels that China has been one of the countries that has managed to keep the pandemic under check more efficiently compared to the rest of the world. He also believes that all talk of production shifting out of China was just fashionable, and he believes that China will continue to be the manufacturing hub for some more time. Now, also what he is saying is that when it comes to China, he believes that everyone has been wrong in terms of having extremely bearish predictions on China, and they have been maintaining their stubborn bearish predictions, but he believes that they have been quite wrong. He believes that China is a country, and China, as both the Chinese currency as well as Chinese equity markets, can continue to do quite well. He believes that the Bloomberg US spot dollar index, that has fallen to its lowest level since April 2018, is another important development. He believes that the immediate downside risk to the dollar has been muted due to the lack of the anticipated blue wave landslide. Now, also what he is talking about, he continues to believe energy stocks will do quite well, and this is part of his opening up trade. So now what he is saying is that greed and fear prefers the euro, as incremental moves towards the fiscal union are positive as they raise expectations of the eurozone moving towards a so-called risk-free asset in the form of a euro bond.